Preferred rates for life insurance policy are very important because we want to get the best rating possible for every one of our clients. In the independent marketplace where we operate, the various carriers and companies are vying for our business, which means that when we submit a policy to a carrier, they're going to do their very best each time to give our clients the very best rate possible, because they know when you have choices and if you have the ability to shop, you're going to look around if you don't get the rate that you think your client deserves. Well, one of the things we've discovered about American General Life, which is, once again, we love all the carriers we do business with, but since they're the company we do the most business with, the actual statistics from American General Life on all their term life insurance business, not just through HBW, is that a full 66% of their clients get a best preferred rate or a preferred rate. Now, when I say that, what I mean is that 40% of their clients are getting the very best preferred rate, and the other 26 are getting either the second best preferred rate or a preferred tobacco user. So it's very important to note that fully 40% of their clients are getting the very best rate possible. We want to be able to offer our clients the best rate and know that the company that we're doing business with is going to try and get them the best rate possible. When you're shopping for rates with your clients, various companies have different methods, as I mentioned earlier, whether it's family history or height and weight requirements or driving records or how long before they were, if they previously smoked, how long they haven't smoked. There are companies that will give, for example, the best preferred rate for somebody who's stopped smoking just 1 year ago. So there's all kinds of different options, there's all kinds of different circumstances, and it's important to know that when you're working with clients, you have the best option for them every time. Recently, I had a president of an insurance company come into my office and talk to us about representing his carrier. This particular company had great products, but one of the things they did is, as the clients got older and as the face amount increased, they were asking our agents to take a decrease in compensation on the bigger the face amount and on the older age clients. And I told this gentleman that we absolutely would not do business with any company that cut the compensation for people for doing a better job for a client. We will never do business with a company that cuts the compensation to an agent on the bigger face amount they sell and on older age clients. Now, the exception may be with an annuity where they have certain restrictions on certain ages because of the way an annuity is structured. But on a life insurance policy, we don't believe that a commission should be cut based on the bigger the face amount, the less commission you're going to get. Occasionally, a client is going to be rated because of health issues. Rated means that the company is simply going to charge more money because the risk to them is greater based on whatever impairment somebody might have. The first company I was with, they did not pay us commissions on those table-rated premiums, meaning that if a client had these impairments and the policy was issued and the client accepted the policy, I was only going to be paid on the standard rate that the client would have paid had they been standard, and any extra premium the company did not pay commissions on. Well, we don't, again, do business with companies that don't pay full commissions on table-rated policies. In other words, if a client is forced to pay more money as a result of a physical impairment, the insurance company on a rated policy, meaning they're going to charge a certain percentage more for every rating level, the companies we do business with will pay you full commission on all what we call table-rated policies. There's a specific reason why we use multiple carriers and have multiple products. Every insurance company that we do business with has a different way of looking at risk and a different way of pricing for risk. For example, ING Life is one of the few companies that does not take cancer into account when deciding who should qualify for preferred rates. So the fact that my mother died at age 46 of cancer, with most carriers would exclude me from getting their best preferred rates. But ING has recognized that because of advances in science, cancer is far more easy to deal with than it was in the past. So if somebody's parent died of cancer or heart disease, with most companies, you're going to be excluded from the best preferred rate. But with ING Life, for example, they do not count cancer against you for your best preferred rate. So for me, ING is a great alternative because I qualify for preferred in every other way except that family history of cancer. And also it's important to understand that companies look at family history differently. For example, some people take death prior to age 60 as a reason. In other words, if somebody had cancer but didn't die, that would not be something that would eliminate their ability to get the best preferred rates. Some companies will only take an occurrence of cancer or heart disease prior to age 65. Now, why is that important? Well, there's a lot of mortality between 60 and 65, so your best bet to get preferred rates is with a company that has the easiest qualifications and the shortest time. It's easier if somebody had an occurrence of cancer or heart but didn't die from it, a family member, as opposed to somebody who actually just had an occurrence and they hold that against you and they carry that all the way to age 65. One other quick thought is, I also want to have available to me carriers for people who may have health impairments, where some companies look at a health issue differently than others, or whatever the case may be. Some companies are expert at older age clients who are trying to transfer wealth. Some companies are looking for clients that are mid-range, typical middle America, very young, very healthy. I want a product and a carrier for every potential client that I come across.